Good afternoon and happy Thursday, everyone. This is Scott Wohlers with River Place Capital. It is Thursday, September the 4th, or as we call it here in Jacksonville, 904 day, but wanted to take just a brief minute to discuss what the markets did last week, as it was a pretty flat week, as it was down just slightly on all three indexes, but not by much, with the S&P down 10 basis points or 0.1% on the week. The mid-cap index was down 6 basis points or 0.06% on the week. And the small caps were down a little more, down 40 basis points or 0.4% on the week, heading into September with the short week this week with the holiday on Monday. And did you know that there is only 1 month in the year that has historically returned negative returns in the equity markets? Believe it or not, that 1 month, September. We are now entering in September with 53% of the time the month of September has provided a negative return in equity markets. So why is that the case? Well, there's several reasons why we believe that may be the case historically, and we'll touch later on if we believe that those historic trends will be the case for this September, if we're in the 47% camp of the times when it actually goes higher for the month of September. So as we move into September, we have a couple of factors that play into why there's selling pressure in equity markets. You're heading into the end of the fiscal year for most mutual funds, which means they're going to either start selling to lock in their profits for the year or start selling for their losses and capturing those losses for the year. We also start the tax loss harvesting season for any equities that may have underperformed or maybe down year to date. You can start seeing some selling pressure, and whenever you start seeing more selling pressure than buying pressure, the computers and the algorithms start kicking in and you get a bias to the downside and you start to get a trend that way. The other thing to consider too is while that's happening and you're just selling, whether even if it's to book a profit or to book a loss, you're still selling in the equity markets. And so the other thing to take into consideration is October 15th is a big tax date for corporations, real estate taxes, and people start raising capital in advance for that ahead of the upcoming month in advance. Or they start in September to get ready for the October 15th payments. But as we look at the markets this year, and as we sit on September the 4th, 2025, we have got some very good technical news that is, we believe, going to see the market broaden out for a couple of reasons. And this can all get thrown off if the Federal Reserve does not cut rates in a little less than in 13 days when they meet on the 17th, when they come out with their decision whether to cut or not. And so what you got today was an employment number, while still positive, less than expectations, and you're seeing a slowing trend in the employment. And why you're seeing a positive market response to that is you're seeing yields fall on that, as that's supporting the Fed's case to cut rates in those 13 days that we talked about. So we see the rate cut as being a catalyst for allowing some breathing room in equity markets, and if anything, to even allow the market to broaden out. And what I mean by that is I would, as I start quoting off, if we do get these rate cuts, when I start quoting off these weekly numbers, I would expect to start seeing the small and mid cap indexes outperforming the large cap indexes. That it would be a market broadening out, as well as starting to see some of your value sectors outperform some of your growth sectors like technology and communication services. Think sectors like healthcare, think sectors like industrials, materials, energy, real estate, things that are very cyclically and oriented in nature. Those have the opportunity to start outperforming. So as we look with into our crystal ball for the month of September, if these things align properly, we could absolutely see positive returns for the month and buck the historical trends. So if you're looking for opportunities to get in and want to be patient and want to look, we understand that. But if you have questions about how to navigate this market that just continues to want to move higher, give us a call. We'd love to talk you through a good strategy on how to game plan around that. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.